Hi, Ron. It's Stuart here. Welcome to the final day of the month of the week, I should say. Excuse me. We are at Friday already. I'm going to be away after Monday next week for a couple of weeks. So best part of 3 weeks, in fact. So I'm a bit demob happy already, which is a bit naughty, isn't it? It's on Friday. So anyway, it should be non-farm payroll day today. I'm sure you're all aware. We obviously that's not happening. We have got jobs today. It's the Canadian jobs data is about to drop in 10 minutes or so. Our calendar, as usual, is playing silly buggers. Let's just try and do today. Oh, it's worked for today. There we are. Here we are. Employment change from Canada expected to come in weak. It was a surprise to the upside last month at 60.4 thousand. Unemployment rate still relatively high for industrialized countries. In Japan at in Canada at 7%. Excuse that Freudian slip. Japan is where I'm going next week. There we go. It must be on my mind, shall we say. Got to do some packing this weekend. Jobs data out of Canada is the main data today. US will issue some more private information. This is from the University of Michigan in an hour or so. The key consumer expectations and consumer preliminary numbers here, as you can see here, So it's the first reading for November as we sit at November the 7th. What's with my background? My background doesn't look great, does it? Let's look at these settings. Actual background solid. No. It's all a bit fuzzy, isn't it? There we are. Yeah. Anyway, I'm in my home office today, so not in the normal office. So I don't know what's going on there. Anyway, I say Canadian data in 10 minutes and US data, key US data in what's happened there in an hour's time at the end of the month. The end of the week, I should say. Sorry. Rig count as well as far as oil markets are concerned, but oil's just really moribund. Markets now really, expectations with regard to the 10th of December rate cut easing somewhat. We had that layoffs yesterday. We had that country private data so that's why the fact that the government is now in its 34th day, 35th day in its shutdown. Stocks were down significantly again yesterday. Nasdaq was down 1.9%. S&P was off 1.12%. Euros up again this morning. This is our long trade from last night. Actually, we probably would have hit target now. I closed this out for a small loss, about 10 pips this morning when it was going against me all morning. Went out, now it's come back, and it was probably a bit target there. What's that target? 1542. No, it's not quite. It's only 20 pips to the good, but that's now going in the right direction. But we're out of that one. As I was saying, expectations of a rate cut in December has eased somewhat, given the comments from the Fed members and the lack of data. And quite understandably, they're saying, I think it was Goolsbee yesterday. Emphasizing the lack of official data, makes us cautious. So why do something when you're working relatively blind? Obviously, it's the last thing the administration and Trump and his team would like to hear. But it looks like they probably will still cut 25 basis points, because by then, surely the difference between the Republicans and the Democrats will be sorted out. We can get to the table. Government can be restarted by the 10th of December. But how much of the data there is then sort of leaked out or released officially that's been held up? But that obviously might then colour what the Fed have to say. So probably then. But we're now looking really, where are we now? We're at the 7th of November. Thanksgiving is obviously the final Thursday of November. So there's a bit of a 2-week window. Obviously, everyone's out of Washington at the moment, so it's a big logistical exercise. They were talking yesterday about reducing some flights within the United States because of the pressures on the air traffic controllers, and they haven't been paid for obviously 4 weeks now. Food stamps are the other big issue that's come to fore this week in particular. So, although it's been pushed to the side, Trump was out of the country for over a week last week. With his government shutdown, but it's becoming more of a political hot potato as it goes on. It's the second longest ever, and with that weak sort of jobs data yesterday, even though the ADP number on Wednesday was better than expected, it was the layoffs number that spooked markets yesterday, and we saw this move down. Sorry, I'm talking about markets. If we just look at the actual indices yesterday, Nasdaq in particular, I say it was down big 2%, and it's down again this morning. This was yesterday's significant move on the open. Remember, the markets here in the US open at 2:30, cash markets, and we moved into the low of the day as Europe was closing yesterday, and then we've moved lower again this morning in pre-market, and we're still an hour away from cash open. So the Nasdaq 100 under the key 25,000, the S&P under 6,700 at 6,695. I'd say yesterday we lost 76 points. We closed at 6,720 yesterday. Now we're under 6,700. And the Dow, not as badly hit as the other two, but also down and under the 46,800 handle for the first time in quite a while. It's the hourly chart. So, and there we are, that pivot area pre the 10th of the 10th when that we were rotating through to the upside of that 46,600 level. So that's a key level pre Trump on the 10th of October, and talking about extra tariffs on China and spooking the markets quite significantly. But we are still very, very bid since that April low here on the daily. You can see that we're still up, well over 50% at one point. I think we were from the April low. If we just put the weekly time up there, so it's still a strong equity market. There's that. Sorry, let's move that up now. A strong equity market. It's the weekly candles. You can see we're down this week. We were down significantly on that 10th of that Friday. I counted for most of that fall on that week beginning the 6th, but we're down this week for the first time in 3. Or first time in 4, and it's quite a significant move. So a break below this pivot area here would catch my attention. Also, we were still above the key 20 period moving average. We're still in the upper half of the Bollinger Band on these higher weekly time frames. But if we step down the time frames, you can see the daily chart has rolled over and in to test the key. I'll reset it. There we are. In to test the key 20-day moving average yesterday, and today we're trading under that key level for the first time in a couple of weeks. So last time we went to the bottom. There's that. That's the extreme. That Trump a shouting match because he didn't get his Nobel Peace Prize, and cranking tensions up against China. That's all then been resolved when he went to CG. And we moved higher, all-time highs just last week before last now. But now we're back again. So cooling, a lot of valuations are very, very rich, particularly for the tech stocks. So tech has moved down significantly, and the Dow is still moving down. So the Dow under its 20-day moving average today. The S&P 500 also breached and closed below the 20-day moving average for the first time in a long time yesterday as well. You can see if we take out the November, that October the 10th worry for a week, and then we were moved higher. So is this a new trend as we're moving lower? It's potentially looking a bit like that at the moment. Excuse me. And the Nasdaq that's benefited the most has come off the most aggressively as well. So the Nasdaq 100 under the 20-day moving average yesterday, and I say today we are under that key 29,000 level. Okay, so stocks cool quite significantly. It was still relatively well bid, but heads up because we're under the 20-day, into the under half of the Bollinger Band, under the 20-day moving average, and 50-day moving average all the way down here. But stocks cooled significantly. Okay, so let's just go back to the Forex. Let's have a look at the Canadian crosses ahead of this expected weaker employment numbers out of Canada. So a decline of 5,000. Anything positive will be good for the loonie, which has been under a lot of pressure recently. And unemployment rate could go either way. It's likely to stay unchanged at 7.1%. So let's have a look at the CAD crosses so far today. So the main one, obviously, dollar CAD 140.68 at the moment. It's had a good morning. This is the daily. Sorry, it's the daily. So we're down. We've had a dollars. Sorry, the CAD's having a good day. That's what I'm saying. Trying to say dollar CAD is down, but we've been bid quite significantly from this low when we went to 138, under 139, all the way yesterday to 141. 50 zone was tested. We've come down today, giving back some of those gains ahead of this jobs data and obviously the central banks last week with their announcements. So far today, that data must have broke. I'm guessing that's got the 5-minute time frame. Yeah, that data is obviously broken. Here, our crossing strategy again, risk it on big news. But let's have a look what that data looks like. Just refresh my chart for today. So it's got the original line on today, if you don't mind, Mr. Investing.com. So let's have a look. So Canadian, there we are. We've got more of the data there. We've got everything in there. So big positive, better than last month. Wasn't negative after all. So that was a bit of an outlier expectations wise today. Actually, there is a drawdown in full time so it's part time. Look at that. Look at the difference here. So full time change declined by 18,500. Many of those probably going to part time. It might be new part time positions for the holiday season potentially as well being encountered into that. But from a decline of part time jobs last month to a big increase this month, participation rate has ticked up quite positively, and the unemployment rate has surprisingly gone down by 2 ticks. That's significantly better than expected. 2 ticks might not seem a lot, but psychologically we're under 7%, and a 2-tick decline from 7.1 to 6.9% is a good tick up. But as you can see, clearly a lot of that is only part-time, and how long and how sustainable and how reliable those part-time positions are, whether that's out of need or necessity, these part-time jobs, big ramp up. So total change in employment up significantly to 66,500, and permanent wages ticked up quite significantly as well. So costs are going up here in Canada. So overall, that's a good number. Obviously, the big caveat would be this huge chunk of part-time employees that's come in there for the Canadian number. But you saw the change headline is really the one that's grabbed it. Expected 5,000. Some of the calendars had about 3,000 decline, but a decline. This is a gain bigger than last month. Big old jump there for Canadian jobs, and the unemployment rate coming down quite significantly by 2 ticks of 1%. So if I just bring in the, you can't really tell on that one, but that's actually again, if I bring this up here, bring it in Forex Factory, we can see if we pull that forward, you can see what a significant gain it was. Expected to be negative, and it's quite a significant gain to one of the best months in a while. So one of the best months of the year so far. So a gain for Canadian jobs, and certainly better than most of 23 and 2024. So good November for Canadian jobs numbers, coming at 66,500 compared to a decline of 5,000. We can see there. So hence the CAD has gained. So dollar CAD, which was already sort of topping out, and this here had gone short through the having touched the outside of the Bollinger Band up there. We then gone short here on the cross of the stochastics here. Remember, this strategy is a mean reverting strategy. We're looking for a touch on the outside. So here was a touch on the outside here. Wait for the cross of the K and the D line to be positive, and it's happened not there but there really. So that's gone long there. Target 1 is the midline of the Bollinger Band. Target 2 is the outside of the Bollinger Band, which we touched there, and then we're looking for a turn back down, and that's what's happened there. So we've gone short there at 1 o'clock, ahead of the data. Again, risky, but enough. And it's waterfall, so there's no need to sort of close your trade as we touch the outside of the Bollinger Band, as the strategy suggests, because when you get a move like this because of the data, you sort of hang in there and trail your stop loss down quite aggressively. So now on this big move, this unexpected move, I'd have my stop loss here at the bottom of the Bollinger Band as we continue to move down. So we would have got in short with this strategy. It's a very, very simple strategy. Anybody can apply this, guys. It's whether you can automate it. And I've got the code if you want it. But there we go. So we're looking to cross here now. So I might be locking in. My stop loss is here now. I've got in here. My stop loss would have been up here at the top of the Bollinger Band. If this candle closes green, because we've got the cross here on the stochastics here, obviously we could still go lower. We've already been significantly lower. I might be closing this out, but my stop loss is here. I've got a gain of what? That's 141.07 to 140.79. So 20 odd points, 25 points to take the spread off, something like that at least. If this closes green, this continues to cross and then move up, we might even go long. But at the moment, I'm still short. Let's say that's my entry. My stop loss is at the Bollinger Band now because it's such a strong move on the back of the news. I don't normally trade the news. I wait for it to settle. So this could obviously come back up, but we're in the 5 minute is in sync with what the turn we saw in the market on that hourly chart. So if we go up to the 10-minute chart, that hasn't touched the outside actually. So the 10-minute wouldn't have triggered a short position. The 15-minute again it's been in the under half of the Bollinger Band. So we're with the trend, very, very much with the trend. That would have been another continuation short there. Touch the outside, move up against. There's target 1, but then it's reversed again there at 1 o'clock. See what's happened there. So as I say, the big hourly candle has since the data obviously moved us down, but we've been here all of the European session. We've been in the under half of the Bollinger Band. You see there on the hourly chart that cross of the stochastic and the cross into the under half of the Bollinger Band. Target 1 would have been eventually taken there. If you haven't pulled your stop loss down too aggressively, you might be taken out. But certainly, as far as scalping this or trading this on the short term on our preferred 5-minute time frame, let's see if where this candle actually closes. Look there. We haven't actually been. If we zoom that in, we haven't actually been taken out there. So we're still. The spread might have taken us out. I haven't actually got a live position on this. I'm talking theoretically what would have happened, but certainly I'll be out on the completion of this candle if we don't get stopped out in the meantime because of the turn here and I didn't want to be too greedy. I wasn't expecting this move in news, but 25 pips on dollar CAD on a Friday afternoon. I'm happy to take that to the downside. Let's have a look. We'll come back to that in a minute and see what's happened if our stop loss has been hit, or let's say it's 2 more minutes. We'll come back and see what's happened. But it looks like that we've got a nice gain on that. Crypto continues, or Bitcoin in particular, continues its week run. 100,000 tested yet again today and under there. Here you can see on the 5-minute, my 1,000, for some reason, my 100,000 levels gone again. Oh, this bloody platform. Doing my head in at the moment, Trade Locker. Let's put my, what's my 100,000? It's just around about there. I'll make it a big fat one. It's key number, isn't it? 100,000. Coordinates 100,000. Delete 100. 100,000. There we go. So there we are. So we've been under that this morning again, quite significantly. And the thing I want to bring your attention to is a whole body candle. So this week, when we've gone under 100,000, it's been within the hourly time frame, 3-4 hours. We've been under the 100,000 level so far earlier this week. Today, Friday, obviously ahead of the weekend, government shutdown still in full flow in the Americas, and weekend's already upon us in Asia. The body of the candle has actually been under 100,000. It may not sound significant, but the trend continues to decline. So there's the hourly. There's our 4 hourly move lower, and the 4 hourly candle is yet to have a body of the candle under the 100,000. So that's the next key step. As you can see here, the wave down, the retrace 20 midline, the Bollinger Bands kept you short. Another big candle there yesterday afternoon on the US Open, and then closed lower. Actually recovered a wee bit in the Asian session. Now we've been lower again in the European session, and again, as I say, under the 100,000. So obviously those lows we saw earlier this week, 98,900 is where we got on here on our system here. Remember, there's obviously lots of different exchanges trading Bitcoin, but it's, the trend is undeniably to the downside. If we go to the daily time frames, you said yesterday, we remain quite a long way under that key 20-day moving average. We've had an expansion in the Bollinger Bands, expansion of volatility, and it's been to the downside. And now you see on the daily, there's 1, 2, 3 days now banging right into that 100,000 level on an end of day basis. So if this breaches today or tomorrow or Sunday under the 100,000 level to close the candle under 100,000 level, that'll be the first time on an end of day basis we've been under 100,000 since the 7th of May. Okay, write that in your diary. 7th of May. And what is it today? It's the 7th of November. What can I say? These things happen, my friends. So Bitcoin remains very weak. Guys, if there's anything else you want to have a look at, I'll come off out of these, but their Bitcoin trend is lower. Next week could be key to go into that second week of November. Oil remains untradeable, really, for me. And here we are, WTI under 60 again, 59.98. Again, another one that's lost my $60 line, but just hanging on here on the daily basis. 20 is hanging on, but it's looking quite weak. Small candles, bias of red candles to the downside, small-bodied candles after this leap up we saw here towards the end of October. We got back into that 62 channel. I've been saying this every day, right, for the last week or so. But weakness to the downside. Brent the same, except 65 is the floor, not 62. So for the channel that we were in during the summer. So weakness there, 64.20 on Brent. I'll come back to some of the other Forex. We've had a look at the indices, and obviously the daddy of them all, our favorite asset. Most of you trade gold, and again, another one that's meandering now around the 4,000 level. We're at 3,995 now, but again, another week with 3,900 really being the floor since we've collapsed from these all-time highs in the middle of October at 4,375. So I should probably. It's just that the system's just taken off. So 3.9 is the channel that we are meandering in. It's a bit of an extended one on to be honest, but it's it's a significant round number, and you see it's really about $20 above that 3,920 on an end of day basis. So that's a higher support zone. But if we come down the time frames, the hourly will be relatively positive today. Well, again, chopping it sideways, nothing to get too excited about. That would have didn't actually hit the outside. Oh, it would have done there, wouldn't it? And that's gone short there. Target one there, it's moving down, but sideways action and consolidating continually for gold. So it's holding up. I mean, we're talking about this being weak because of reform, but historically these are very, very high levels for gold. The demand is still there. We had a shakeout on that 10th of October. We haven't recovered. Sorry, the 21st went the other way around on the 10th, didn't it? And on that Tuesday, the 21st. We haven't recovered from that, but we don't really want to breach and break away to the downside from the 4,000 level. But we are now 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days trading around or just below the 4,000 level. So again, that's too early to say what's going to happen next. But here you can see the Bollinger Band top is very horizontal. The bottom is horizontal. The 20-day moving average is horizontal at 4,085. So it's stopped trending. It's going sideways, but there's certainly buys at 3,900 and above that around about 3,920, 25. Also buyers so far in this decline, so it won't go lower at the moment, but when it does, it can move quite quickly, and similarly when it moves high, it can move up. So the dollar needs to weaken a bit more. We need to see a reduction in the a significant reduction in the expectation of the December, and now obviously January is now in focus. But if we just have a look at the FedWatch tool from the CME group here, this free to use symbol, which tracks the meetings. So 33 days to the 10th of December, and a 70% chance now, and a 30% chance. Let's call it 70-30 chance of a 30% chance of a no change. So 70%. So a month ago it was at 82%. A couple of weeks ago, it was up at 95%, 99%, wasn't it? Chance of another cut in December. That's disappeared quite quickly, and in the weakening of the jobs data, such as we've got it. And obviously, the way that what's weighing on this, obviously, is the government shutdown as well now into well over a month now. So 70-30 chance still of a cut. 70-30 still a good odds, isn't it? 33 days out. But it has been much, much better. It's a bit weaker last week, but we'll see what happens as we move forward. So still likely that the Fed will cut, but watch those bond markets as well. The 10-year hovering around that key 4% level as well. So that's been key this week as well as that layoffs at that 22-year high yesterday, which really freaked things out. We had that big move down in stock markets. So there we go. So looking ahead to next week, bring up the calendar. Next week, second week of November, still no sign of a resolution. I mean, things might move ahead on the weekend. As I say, I'm actually away from Tuesday. I'll be here on Monday, but I've got I've got no open trades at the moment, and I probably won't take any tonight, just from an administration point of view. We've had a good November so far. We're up 1,200 points for this week, thanks mainly due to the Nikkei and the DAX from a points point of view. But I mean, even from a percentage point of view, the Nikkei gained us 4.6%, really strong run from the 20th. The DAX, we actually lost, didn't we, 128 points, and the was it the Dow as well? That was last week, wasn't it? No, it's just the Nikkei, that second half of that trade. So big 4% gain. And there was a, where are we? There was a 2% gain. I haven't written down there for some reason. Of the Forex last week as well. So anyway, I'll document the numbers, but say 1,200 points this week. Thanks very much. Wednesday was a great day for Forex. We had 1, 2, 3, 4, 5, 6, 7, 8 trades. All of them, 7 winners, 1 loser. We were up 187.8 points on Wednesday, just from 8 Forex trades. So say 7 winners and 1 loser on Wednesday. The euro, the Aussie, the Kiwi, pound, yen, pound, CAD, euro, New Zealand, CAD again. No, CAD, did I say the CAD? I can't remember. Second half of that CAD trade. The losing trade was the pound CAD again. My nemesis position. Anyway, next week, let's have a look at next week. Whilst we're here, see if it. The main events, the 2 and the 3 bull calendars for next week. Inflation from Germany, from Japan. Oh, I've got Japan on the brain, haven't I? China over the weekend. Still, disinflationary, still very weak. Look at this, 2.3% negative for PPI, CPI 0.3 of 1%. So it looks like they may have to do something. Obviously, we've seen these weak factory orders again today out of China as well. The government there may be looking to boost the economy. There, quiet Monday. No 3 stars on Tuesday either, although we do have the key ZEW economic sentiment. It's a key sentiment reading out of Germany in particular, but there's a wider Euro one as well on Tuesday 11th. It's Armistice Day there in Canada. It's Remembrance Day here in the United Kingdom, 11th of the 11th hour. Well, you got jobs numbers out of the UK on Tuesday as well. And I think it's isn't it? Yeah, see, that's the main event of Tuesday. Wednesday the 12th, we see inflation out of the what has traditionally been the powerhouse of the European economy, the German inflation data. Remember, they release it by state, so some states can do much better than expected. So watch that one as well. A key speech by Mr. Barr from the Fed earlier on in the day as well. And that's, I think, it really for Wednesday as well. It is, I think, isn't it? Wasn't it? Yeah. Waller's got a speech. Williams got so plenty of, with the lack of data, still probably government shut down. The comments from the Fed speakers. Obviously, Waller still in the frame to be the new Fed chair. Key what he has to say. Williams, chair of the key New York Federal Reserve. So key what he has to say as well. So watch that certainly on Wednesday. Thursday, the 13th, jobs from Australia overnight. Some GDP, monthly GDP numbers from the UK. It's not too important, to be honest. And some industrial production and manufacturing production UK data as well. Remember, it's sentiment-wise, it's very important still. Manufacturing and production and construction and all those sort of heavy industrial numbers, but from a economic point of view, as far as the economy is concerned, in the UK, it's still a very small sector compared to the services sector and business investment. Similar data from the EU as well later in the day. This is due. It won't happen. The inflation data and the weekly jobs on Thursday as well out of the United States. Well, maybe, but that's when it's scheduled to happen. The non-farm payroll will be scheduled to happen on the 14th if they remarkably get to some sort of resolution about the government shutdown. But Friday is relatively quiet as well. Some key industrial data from China earlier on in the day, and some inflation from Spain and Euro employment numbers later on in the day. And that's really about it. So a relatively quiet week, unless we see some resolution to the shutdown in America, United States, where we could see a raft of data that's been delayed suddenly coming out. But at the moment, watch that likelihood of the rate hike. The rate cut for December. Will it hold over 70? Will we slip next week? It still looks like it will happen, but this might come down relatively significantly. And obviously, the longer the shutdown goes on, the more reluctant, I would argue, many members of the Fed will be to actually do anything, activate anything. And then if the data suddenly comes out in all of a rush, might take a while to assimilate it all. But anyway. Watch that. So I'm going to leave you. Gold continues to struggle with 4,000. As far as the Forex business is concerned, we look at the dollar today. Euro up 115. 66. So it's had two good up days from a big move down, but it's still under the 20-day moving average. So a break higher above 116 now, or 115.95 is where the 20-day is for the euro. So dollar still relatively on the front foot. Dollar CAD very much on the front foot in the upper half of the Bollinger Band. We've had a down day today, thanks to the it's been added to thanks to the good jobs data from Canada. But we have been as high as 141, so that's the upside target for next week, and our support sits at 140.25. Dollar yen 153.36. Some positioning within the new government, some key economic announcements regarding who's doing what job from the new Prime Minister coming forward. Obviously, people in line and in sentiment with her thought process. And so, this trend of the weaker yen, stronger Nikkei is continuing. So, dollar yen has support at 152.45 with a top at 154.20, which we haven't been able to break this week or last week. So 154.20 is the upside target, and 152.50 is the support on that 20-day moving average. Euro we done. Aussie 64.88. So the key dot 65 is still the upside target. The 20-day moving average is 15 pips above that is 65.15. But again, this is way dollars on the front foot. Same with the Kiwi. Kiwi's in a weaker position than the Aussie. The 20-day sits there at 57.20, and we're currently trading at 56.23. So that's very much one to be selling. Are we going to find a floor? Well, if we look to the left here, this is the daily. You can see still a bit of weakness here on the daily candles. The real floor sits there at 56 itself, and we're at 56.22 at the moment. That trend looks like that's going to continue for a stronger dollar against the Kiwi, the CAD, and the Aussie certainly, and also up against the yen. So dollar on a bit of a front foot at the moment. Okay, as the likelihood of another rate cut sort of tends to wobble. If that changes, obviously that will turn that momentum around. Watch the bond market as well. That's been a key driver of things, and obviously the data. We're not coming to the end, but it's a weaker week next week for earnings numbers. Nvidia's the next big one that everybody's looking forward to, but that's the following week. I think Nvidia is I've still got my little paper diary with all written. Yeah, Nvidia report on Wednesday, the 19th of November, not next week, but the following week. Okay, so some big tech companies have been reporting this week. Palantir sort of knocked out of the farm. Musk has got this massive potential payoff if he hits some massive targets. To be fair to the guy, this $1 trillion pay package, but he's got to produce some 7 or 8 times where they are now. But it gives him the impetus if he needed it. So watch those tech earnings as well, those tech valuations, which is what really has spooked market, and any comments to that next week. But we might see a resilient this afternoon. We're still a half an hour away from the open. I'll just leave you with the Nasdaq, which lost, I say, nearly 2% yesterday, but we were down significantly this week. Down significantly again yesterday, so 1.9%, and we're down again today. The futures at the moment, and we're trading it back to that 25,000 level. So will that give away in the real cash session? So take care, everyone. I will see you all on Monday for the last time for 2 or 3 weeks, or best part of 2 weeks. I'll be back the 20 Friday. This one. So it's 1, 2, 3 weeks today. I'll be back on the 28th of November. Okay, take care. See you on Monday for the European Open. See if we can scalp some of that. My favourite, the DAX, which we've done very well at recently. So using this strategy. So let's go back to I can't remember what we were. Was it the euro? Can't remember what we were doing. Was it euro? No, it was USD CAD, wasn't it? Is what we had open, didn't we? We were going to see if that was going to. Probably did close us out, didn't it? The line. Oh no, we lost them. Oh no, that's our 5 minute. There we are. So that was that green candle we were waiting for. What we so we'd It's moved on quite significantly there. So we'd have got out here. Just that's our stop loss. Didn't actually hit our stop loss, but I was happy we'd have taken it out there on that. But then, as you can see here, it's continued. We haven't crossed up, so I wouldn't have re-entered. But anyway, so a move from 141.07 to 140.78. So that's 22,729 points. So call it 25 points. Take the spread out. So a nice 25-point gainer there with our crossing with our Bollinger-Band and stochastic strategy on the jobs news. So, CADs continue to gain against the dollar. 140.65 is where we are at the moment. Okay, so take care. See you all on Monday for the European Open. Have a great weekend. Careful with Bitcoin trying to catch the bottom, but obviously 100,000 is a key one. If you're trading that over the weekend, obviously you can hold positions on crypto or open over the weekend. Just be careful. Obviously, it's lower liquidity, lower volumes. Spreads can be a bit higher at the weekend as well. So, but there we are. We've been 1, 2, 3, 5, 10, 15, 20, 25, 30, 35, 40, 45. Nearly an hour now, over 100,000. But yeah, it's weak, isn't it? Okay. Take care, everyone. See you on Monday. All the best. Bye-bye.